So now let us start the revision of the standard SA 315. So SA 315 mainly deals with identifying and assessing the risk of metal misstatement by understanding the entity, its environment, and internal control. So this standard mainly has three parts: identifying and assessing the risk of metal misstatement, understanding the entity and its environment, and internal control. So we're going to cover identifying and assessing the risk of metal misstatement and understanding entity and its environment in part 1 and internal control in part 2. So let's start. So what is the objective of this particular standard? The objective is the same thing. The auditor has to identify and assess the risk of metal misstatement that occurs either due to fraud or error at the financial statement level or assertion level by understanding the entity, its environment, and its internal control. So basically, when the auditor obtains understanding, he will be able to design and implement the response to the assessed risk of metal misstatement. For the purpose of identifying and assessing the risk, the auditor will first start off with identifying the risk. So, how will the auditor identify the risk? He will identify the risk through the process of understanding the entity, its environment, and its controls. He will also consider the account balances, transactions, and disclosures. So once the auditor has identified the risk, he will assess the identified risk. He will evaluate whether they affect the financial statements as a whole, many assertions, or to one particular class of transactions or one particular assertion. Once he has identified the risk, he will relate the risk to what can go wrong at the assertion level. So first, he will assess the identified risk and check whether they are affecting the financial statements as a whole, and then he will relate the risk to what can go wrong at the assertion level. Next, he will consider the likelihood of misstatements. Are there multiple misstatements? Could it result in material misstatement? First, he will check what is the likelihood of the misstatements. Are there multiple misstatements? Could it result in material misstatement? For example, overvaluation risk in debtor balance. For example, the debtor balance has been overvalued. The auditor will check how material it is and whether it can lead to a material misstatement or not. So basically, these are the 4 steps with which the auditor will identify and assess the risk of metal misstatement. He'll identify, he'll assess, he'll relate, and then he will consider the likelihood of misstatements. Multiple misstatements can it lead to a metal misstatement. So the auditor will start off with risk assessment procedures. So risk assessment procedures are nothing but audit procedures which are conducted to understand the entity, its environment, its internal control, and assess the risk of metal misstatement of either due to fraud or error at the financial statement level and assertion level. So risk assessment procedure has 3 components. The first component is inquiries of management. Second component is analytical procedures, and third component is observation and inspection. So the first component, inquiries of management and others within the entity. So basically you're inquiring the management and others within the entity, all the personnel, all the employees, and different personnel at different levels within the entity. So the auditor will basically inquire the main management, those responsible for financial reporting, that is TCWG. So management and TCWG are the main people from whom the auditor should inquire. Then he will inquire from others within the entity and other employees with different levels of authority. He will obtain information from them. So basically, when the auditor does inquiry, it gives diverse perspective on the risk of metal misstatement. So when it does inquiry from different levels of management, different levels of personnel within the entity, it will give the auditor a diverse perspective on the risk of metal misstatement. So what are the examples of inquiries? Now this part is very, very important. It has been tested multiple amount of times. So first is inquiry directed towards those charged with governance. So those charged with governance is nothing but TCWG. Next, the inquiries are directed towards internal audit personnel. So this we have studied in exercise 610, who are the internal audit personnel and everyone. Next, inquiries of employees. Next, inquiries directed towards in-house legal counsel. This we have studied in SA 501. Inquiries directed towards marketing or sales personnel. Inquiries directed towards risk management function. This also is covered under SA 610. Who is responsible for providing, who gives the risk management function? It's basically the internal auditor. The internal auditor will give assurance and consulting activities regarding risk management, regarding internal control, and regarding governance. Okay. The last one is inquiries directed towards information system. So basically, how you can remember is that basically we inquire mainly from management and TCW. These are the important people from which we need to inquire. So inquiries from those charged with governance, and inquiries from employees, inquiries from marketing and sales personnel. So basically these 3 people are within the entity. Next, internal audit personnel. Internal audit personnel can be within the entity or they can be outsourced as well. So these 2 points are covered by SA 610. Then we have information systems, which is covered under automated environment under this chapter only. Next, we have in-house legal counsel, which is SA 501. Okay, So you can remember it like this: TCWG, employee and sales and marketing personnel as one group, and SA 610 we have risk management and internal control, internal audit this part, SA 501 litigation and claims part, and automated environment. So basically you can remember the points like this. One more important thing. But inquiry alone is not sufficient. See, inquiry is the most efficient audit test, but it gives the least audit evidence. Hence, inquiry should always be used in combination with any one of the other audit testing methods. So, inquiry alone is not sufficient. So, this can be asked in the form of a true or false statement or a correct and incorrect statement, even in the form of an MCQ. Reperformance is most effective as audit test, but it gives best audit evidence. However, testing by reperformance could be very time consuming and least efficient most of the time. So basically, you need to apply inquiry in combination with inspection. See, if you apply inquiry in combination with inspection, it gives the most effective audit evidence, effective and efficient audit evidence. However, it's which audit test to use, when and in what combination is a matter of professional judgment. And it will vary depending on several factors, including risk assessment, control environment, desired level of evidence required, history of errors or misstatements, complexity of business, assertions being addressed. So the auditor should basically exercise his professional judgment, and he should document the nature of the test applied along with the judgments in the audit file. So basically, which audit test to use, which is the best method, all will be dependent on the auditor's professional judgment. So this was about inquiry. Next, let us start with analytical procedures. So analytical procedures has a dedicated essay, SA 520. So in this chapter, they have told us a little basic information because this is chapter number 3. And in chapter number 4, we have essay 520. So they didn't define analytical procedures over here properly because it has been given in chapter number 4. But when you give the exam, you are supposed to write the actual analytical procedures definition over here, because the examiner will assume that you have read the entire audit. So what is analytical procedures? Analytical procedures consists of evaluations of financial informations, which is made by the study of plausible relationships among both financial and non-financial data. So basically, you're evaluating your financial information by making a study of plausible relationships between both financial and non-financial data. So analytical procedures also encompass the investigation of identified fluctuations, relationships that are inconsistent, and other relevant information. So analytical procedures also encompasses the investigation of identified fluctuations, inconsistent relationships, other relevant information that is deviating significantly from the predicted amount. So you can write this definition over here. This also, even it is from SA 520, you have to quote it over here. So analytical procedures, they mainly help in identifying the existence of unusual transactions, events and amounts, and ratios and trends. Okay. So basically, they help in identifying the existence of unusual transactions. So whatever transactions which are unusual, the events and amounts, the ratios and trends, which might indicate matters that have audit implications. Okay. So basically, what the auditor does over here is that he identifies any unusual or unexpected relationships, which will assess the auditor in identifying risk of mental misstatement, especially risk of mental misstatement because of fraud. Okay. Now, analytical procedures involves the use of high-level aggregated data. So, because it involves the use of high-level aggregated data, it gives initial indication of potential mental misstatement. Next, we have observation and inspection. So, observation and inspection is required to support, corroborate, and contradict inquiries because inquiries alone are not sufficient. So, it basically provides information about the entity and its environment. So, what are the examples of audit procedures that require observation and inspection? Entities, operations. So, whatever entities, operations are there, they require observation and inspection. Documents, records, IC manuals. So, you have to observe and inspect the documents, records, IC manuals. Reports prepared by management and DCWG. So whatever reports the management DCWG prepares, like quarterly management reports, interim financial statements, minutes of board of directors meeting, entities premises and plant facilities. So you have to observe and inspect these areas. Now, whatever risk assessment procedure that you perform and the information that you obtain from it, it can be used as audit evidence but not sufficient and appropriate audit evidence. Now what does this mean? So auditor, let us understand it. Auditor can also perform substantive procedures or test of control with risk assessment procedure because it is most efficient to do so. So what they're trying to tell is that the auditor has to perform substantive procedures and risk assessment procedures together to get more efficient results. or you can perform test of control and risk assessment procedure together to get more efficient results. So we all know that audit procedures are broadly divided into risk assessment procedures and further audit procedures. Further audit procedures again divided into test of control, substantive procedures again divided into test of detail, analytical procedures, and test of detail is further divided into testing of transactions and testing of balances. So risk assessment procedure is mainly used to analyze the risk, to assess the risk. So here there are three main audit procedures that we perform. First one is inquiry, the second one is analytical procedures, and the third one is observation and inspection. Okay, so this is done mainly to assess the risk. Test of controls is done to test the operating effectiveness of the internal control, of operative effectiveness of the control environment. Substantive procedures is done to test the financial statements. Okay, so basically up until now you are assessing the risk, you're testing the controls, but now in the substantive procedures you are testing the financial statement items. So here we have test of detail and analytical procedures. So test of detail में testing of transactions में we are going to test the P&L items like income, expenditure, and testing of balances we are going to test the balance sheet items like assets and liabilities. So analytical procedures mainly what they do, they evaluate the relationship, plausible relationship between financial information and non-financial information, financial and non-financial data. So analytical procedures is basically an analysis technique to analyze the plausible relationship between financial and non-financial data. So this technique is also used during risk assessment. So what they're trying to tell over here is that risk assessment procedure is used to understand entity, its environment, its internal control, and to identify and assess risk of making misstatement. It is mainly used to identify high risk problem areas which exist prior to audit. So we all know that risk of making misstatement exists independent of audit. It exists prior to audit. It is the entity's risk. Okay, it is the client's risk. So we have discussed this. Substantive analytical procedures are used to detect misstatement at the assertion level. They are used to test accounts and controls, and you get audit evidence from here. So basically main audit evidence is obtained from here. So what they're trying to tell is that when you're doing your risk assessment only, if you can perform substantive procedures. Why can you perform substantive procedures over here? See, anyhow after risk assessment you have to do that, but if you do substantive procedures along with risk assessment procedure right now, you will get more efficient results. That's what they're trying to tell. Okay, now let us start with understanding entity and its environment. So understanding the entity and its environment, it involves understanding of the relevant industry, regulatory and other external factors, the nature of the entity's selection and application of accounting policies, and any changes, including any reasons for changes, entity's objectives and strategies, those related to business risks that may result in risk of making misstatement, and measurement and review of entity's financial performance. So basically, when the auditor has to understand the entity's environment, he basically understands these 5 points. So he tries to understand what industry is the entity operating in, what are the regulatory and other external factors, what is the nature of the entity, what kind of accounting policies is the entity applying, what are the objectives and strategies of the entity, and how is the entity measuring and reviewing its financial performance. So first let us understand relevant industry, regulatory and other external factors. Now if you take a look at this example, Tata Group has a lot of industries. It operates in many industries. It operates in the automobile sector, steel industry, information technology, then in consumer products, then in retail, in electronics. So analyzing and understanding in which industry is the entity operating is very, very important. So relevant industry, regulatory and other external factors. So examine industry dynamics like competition, supplier customer relationships, product technology, tech progress, market status, and seasonal operations. So first and foremost, you examine what industry is the entity operating in, what are the industry dynamics, how is the competition in that industry, what is the market status, how are they progressing in tech, what are the supplier and customer relations, and what is the product technology, what are the seasonal operations. So analyze these factors regarding industry. Next, coming to regulatory requirements, assess what are the laws for that particular industry, what is the legal or political climate, what are the financial reporting standards, what is the regulatory framework, and ultimately other external factors. So evaluate what is the economic climate in that particular area, what are the interest rates, what is the financing availability, what are the inflation trends. So basically the first point deals with how in which industry is it operating, what are the regulatory requirements, what are the other external factors which the auditor needs to keep in mind while understanding the entity and its environment. The second point is nature of the entity. So the nature of the entity's operations, the type of investments, where is the entity investing, what is the ownership and governance structure, how is the entity structured and financed. So these are basically the 4 points regarding nature of entity. So you can remember it using the abbreviation HOOT. So understanding the nature of entity helps to understand whether entity has complex structure, whether it has subsidiaries, whether it has associates, whether it is a subsidiary. So it basically helps to understand whether the entity has any complex structure, and understanding that complex structure helps to identify potential middle misstatement risks. Okay. So understanding ownership and inter-entity personal relationships also helps to ensure related party transactions are properly identified and recorded. So we have understood that related party transactions are specific areas, specific considerations regarding audit risk. So understanding the nature of entity helps to identify whether there is any complex structure, whether it has subsidiaries. Understanding the complex structure helps to identify whether there is any potential material misstatement risk. Understanding ownership helps to ensure that related party transactions are properly identified and recorded. So this was about the second point. Next, third point is entity selection and application of accounting policy. How is the entity selecting and applying its accounting policies? And if it is changing its accounting policy, then what are the reasons for change? So including the reasons for change, the auditor will try to understand how is the entity selecting and applying accounting policies, including reasons for change. Next point is entity's objective and strategies, those related to business risks that may result in risk of middle misstatement. So what are the entity's objectives and strategies? Those related to business risks that may result in risk of middle misstatement. So entity will conduct its operations in context of industry, regulatory, and other external and internal factors. So basically it will conduct business in context of these factors. To respond to these factors, entity's management will define objectives, which are the overall plans for the entity. So what does the entity do? It will devise strategies, and these strategies may change over time. So business risk is broader than risk of middle misstatement. So risk of middle misstatement is very small compared to business risk. So business risk is broader than risk of middle misstatement, and business risk also includes the risk of middle misstatement. So basically business risk may arise from change or complexity. So in understanding of the business risk that the entity is facing increases the likelihood of identifying risk of middle misstatement, since most business risks will eventually have financial consequences and therefore the effect on financial statements. So auditor does not have any responsibility to identify or assess business risk, because not all business risks give rise to middle misstatement. So what are the examples of matters which the auditor will specifically consider? So whatever business risk is there, the auditor has no responsibility to consider them. But there are certain specific business risks which the auditor will consider. The first one is industry development, the second one is new products and services, and the third one is expansion of businesses. These three areas, even though they are business risk, generally auditor will not consider business risk, but these three areas the auditor will consider even if they are business risk. Okay. Next one is measurement and review of entities' financial performance. So the management and others will measure and review those things they regard as important. Performance measures, whether external or internal, create pressures on the entity. So basically when you keep on measuring the performance, it will ultimately create a pressure on the entity. So these pressures in turn may motivate management to take action to improve the business performance or to misstate the financial statements. Sometimes they will look because of the pressure, they will get motivated and they will try to perform better, but sometimes because of the pressure they will misstate the financial statements. So understanding of the entity's performance measures assess the auditor in considering whether pressures to achieve performance targets may result in management actions that increase the risk of middle misstatement, including those due to fraud. So because of the pressure, sometimes the management, it may misstate the financial statements. So understanding the pressure is very, very important for the auditor. So understanding of the entity's performance measures assess the auditor in considering whether pressures to achieve performance targets may result in management actions that increase risk of middle misstatement, including those due to fraud. So what are the examples of those measures? Examples for measuring and reviewing financial performance which may be used by an auditor. First and foremost one is key performance indicator, then period on period financial performance analysis, budgets, forecasts, variance analysis. Variance analysis we can already we might have understood in costing. Departmental or other level performance reports and credit rating agency reports. So this was about measurement and review of entities' financial performance. So we have completed all the 5 factors A, B, C, D, E. Now let us understand why understanding the entity and its environment is significant. So understanding an entity will help in planning, and it will also help in identifying important areas requiring special attention. First, it will see, we know that an auditor has to understand the entity and its environment right from its planning stage and throughout the performance of audit. So understanding the entity will ultimately help the auditor in planning, and it will also help the auditor in identifying important areas requiring special attention. So gaining knowledge about the client's business is one of the most important principles in developing a non-audit audit plan. So in fact, without adequate knowledge of the client's business, a proper audit is not possible. That's the reason it is very, very important to understand the entity and its environment. Entity and environment understand correctly. These are the 5 main important factors. It involves understanding of these 5 areas. So understanding an entity is a continuous dynamic process. So see, it is not a one-time thing that you've understood once and it ends over there. No, understanding an entity is a continuous and dynamic process. You constantly have to gather information, you have to update yourself, you have to keep on analyzing information throughout the audit. It is not a one-step process, it's a continuous process. You have to keep gathering information, you have to keep updating yourself, you have to keep analyzing the information throughout the audit. And once you have understood the entity, it will establish as a frame of reference with which the auditor will plan the audit and exercise his professional judgment. So understanding of the entity will give you a frame of reference to plan your audit and to exercise your professional judgment. What are the examples? First, assessing risk of metal misstatement of financial statements. Determining materiality as per SA 320 we have understood already. Considering appropriateness of selection and application of accounting policies. Identifying areas which require special audit consideration, like significant risk areas, like fraud, related party transactions, appropriate use of going concern assumptions. All this we have already completed in the audit risk topic. Next, developing expectations for use when performing analytical procedures. So when you're performing analytical procedures, what are the expectations for use are you developing? Next, evaluating sufficiency and appropriateness of audit evidence. This is in SA 500. So basically, these are all the examples. So basically, understanding the environment is a continuous process. It's not a one-step process. So assessing the risk of metal misstatement financial statements is a continuous thing. Determining materiality. See, materiality determined at the planning stage and also throughout the audit. Now, selection and application of accounting policies. Next, areas which require special audit consideration. You have to continuously keep determining these things. Evaluating sufficiency and appropriateness. So it is a continuous process, and these are the examples to support that it is a continuous process. So I have completed with essay number 315.